Okay, guys, so we are going to discuss about unit number 1, and this is our section which is called what? Financial accounting section, and it has from unit number 1 till unit number 16. So this is in total how much percentage of exam? 15% of exam. Okay, so next sections we will discuss once we will go there. So we have a costing, budgeting, these kind of things. So financial accounting section, and it's the first lecture. So let me quickly remind you about the exam format. What's the exam format? Then we will start studying. So this is the same format you will have for part 1 and part 2. Same format. What's the format? So you have 2 windows. Suppose you have window 1. So there you will have 100 MCQs, right? And you will have 3 hours to attempt. And these 100 MCQs will be equal to 370 points. And this will be equal to, you have 3 hours to attempt. Okay. Now here, please remember here at least minimum 50% question should be correct, minimum. If minimum 50% questions are correct, then you will move to the window 2. If you didn't move to the window 2, it means you are failed in the exam. That's it, simply. Okay, if you are not moving to the window 2. If you are moving to the window 2, it means at least minimum 50% questions are correct. Now you will move to the window 2. In window 2, you will have 2 essay questions. 2 essay questions means one long question. Each question will have 3 to 4 requirements, which you have to type. Okay, so 2 essay questions in total with 7 to 8 requirements in total. And here you will have 125 points, and you have a 1 hours to attempt. So total hours how much? 4 hours. And to pass, you need collectively 360 points. Okay, from both sections. Minimum, how many points you need? 360. So this is what is exam format. Okay, it's computer-based exam, obviously. Now we are going to discuss unit number 1, first unit. In first unit, what we have here? We have here external, like this chapter name is called External Financial Statements. Introduction kind of thing we are going to discuss. And these are the topics which we are going to cover here. Topic number 1.1, 1.2, 1.3, 4, and 5. So these are total 5 topics. So first topic I'm going to start, which is known as concepts of financial accounting. Obviously, we are not going to study a debit credit rules. No, they assume, CMA assumes that you have basic knowledge of accounting. Here we will talk about reporting side only. Okay. So here we go. We are going to discuss with the concepts of financial accounting. First of all, guys, remember here, when we prepare the financial statements, so these statements are the part of set of financial statements. Which statements? We have a statement of financial position, which is called what? Balance sheet, right? It's also called statement of financial position. Statement of financial position. Shortcut, it is called SFP. Okay. Second statement which we have to prepare, that is called income statement. Switch off your mics, please. So mostly I will write with the word IS. Third, we have a statement of comprehensive income. Which is called SOCI. Then we have a statement of changes in equity. Changes in equity, SOCIE. Then we have a statement of cash flows. And last we have our disclosures, which are called notes. Okay. Now, these, when you prepare these financial statements by using either IFRS if you are following, or if you are following GAAP. So if you are preparing these financial statements by using IFRS or by GAAP, this is called general purpose financial statements. What it is called? General purpose financial statement. So this is what I told you, this word. The financial statement which we are preparing by using GAAP or IFRS. That is called general purpose financial statements. Okay. Now here, what is the point we are going to discuss? The point which we are discussing is that is called objective of general purpose financial reporting. Like what is objective? Objective is very simple. Objective is what? Objective is to provide useful information. Which information? Useful information. To whom? To the users, whoever will use. Okay, now when we say useful information we say these three keywords. This is the objective of general purpose financial statements. Like when we issue to the public, the purpose is to provide useful information. Useful information means what? Information must be relevant to the business activity. Business activity is known as economic activity. Then information, whatever you are presenting, that must be faithfully presented, like don't lie, don't overstate or understate the values intentionally. And then the information must be what? Comparable. Comparable is how it will become comparable. Obviously, when you follow GAAP or IFRS, so they are defining standardized formats of income statement, standardized formats of balance sheet, etc. Obviously, we will prepare the financial statement by using the same format every year. So you can compare your financial statements with your last year's. You can compare your financial statements with the competitors or with other companies. This is what is called what? Useful information. Clear? Next, what you have to memorize. This I already told you, financial statements include what? These are the statements which are included. Now there is one point which I'm going to explain here, that is about disclosures. Obviously, with the passage of time, we will study disclosure requirements for every topic. But here I'm just giving you one idea which you have to memorize. Mostly what we disclose, giving you a rough idea if you hear those words. Like maybe you are disclosing, for example, different segments. If you are operating, you have to disclose, right? For example, if you have a different methods of accounting, let's say in cost model, revaluation model, you are choosing one. So that you need to disclose which method you have followed, right or wrong? Like point is that whenever in accounting you have choices to do the accounting. For example, you can value the inventory by using LIFO method or by first in first out method. So it means you have a choice. It is called accounting policies. So whenever you have a choice and which policy you are following, that you have to disclose. But what I'm trying to say, guys, in disclosures, if you have other examples, for example, if you have some provisions, right, based on your estimates, you can disclose. Like wherever you feel that reader must get more information about this item, so you can disclose. But this point you have to memorize. Financial statement notes, the disclosure should not be used to correct improper presentation. What it means? Maybe you have applied the standards in wrong way. Right. So now you are justifying your wrong implication through the disclosure. This is not allowed. Okay. Disclosure should not be used for what? To incorrect, improper presentation. This point you have to keep in your mind. Okay. Now here we have a basic introduction of financial accounting, because accounting has two branches, you know, financial accounting. Second is called management accounting. What's the difference? Number one, aim. F stands for financial accounting. Financial accounting purpose is to provide information to whom? To the outsiders. Outsider means say external parties. We are reporting to them. But management accounting, like management accounting in which you produce various reports, budgeting, etc. So this we produce for which? For internal parties, for their decision making. This is the first difference. Second is what? Regulatory requirements. Financial accounting is mandatory by governing bodies. For example, if you are a listed company, so for you it is compulsory, you have to issue financial statements. But even you are listed company, management accounting is not compulsory that you have to issue now. Okay, this is second, regulatory requirements. That is what? Governing principles. When we prepare financial statements, we always follow what? Either GAAP or IFRS under financial accounting. Okay, we have to follow this. But for management accounting, there are no such standards. Management, whatever reports they want, you can modify the reports according to that. Okay, so there is no specific standards. Then time horizon. Obviously, when you prepare the financial statements, you prepare at the end of the period, right? So it covers which year? Generally last 1 year. But management accounting, in contrast, management accounting, there is no time horizon. You can produce reports for any particular period. Okay. Output. Under financial accounting, we produce what? Financial statement, which includes what? Profit and loss account, statement of cash flows, etc. But for management accounting, we include different reports, maybe variance, budgeting, product analysis reports, right or wrong, these kind of things, forecasting, right? Then we have what? Relevance of data. Financial accounting data is almost 100% verifiable. Who is verifying? Auditors. Like, is it correct or not? But management accounting is not 100% verifiable. The reason it is based on sometimes assumptions like budgeting. It is based on your assumption, which is not verifiable. If you change assumptions, amounts will change. Independent audit. For financial accounting, audit is compulsory if you are a listed company. External audit. But for management accounting, it is not compulsory. We don't do for management accounting. Right? Then we have what here? Confidentiality. Mostly financial accounting, there is no question for confidentiality because we prepare for the public. There is no question of confidentiality. Like it is confidential, you need to leak out. No, it is for public already. But management accounting requires confidentiality because it's internal reports which you will use for decision making of the company. Okay? Clear, guys? Okay, so now I'm going to tell you what other points. This list you need to memorize, please. Huh? Okay, what's the list, guys? Guys, here, first point which you have to remember, this is one definition which is called what? Going concern. What is going concern? It's assumption when you prepare the accounting. What is this assumption? It means we assume that our business will last for foreseeable future. Foreseeable future means more than 12 months or 1 year. Based on that, we prepare the financial statements. That is why we categorize assets, current and non-current. Like these assets will give you benefit within 1 year current. These assets will give you benefit beyond 1 year. That is called non-current. Right or wrong? So based on that assumption, because if you feel your business will close within 2 months, 3 months, or 6 months, so then there is no point to disclose current assets and non-current assets. This is the assumption we assume our business will continue for the foreseeable future. Right? Then, guys, please you have to memorize this statement. Points. When we prepare the financial statements, just words you have to keep in your mind. With the passage of time, with topics, these words will be open. When you prepare the financial statement, you use different values to prepare it. Sometimes you use which value? Net realizable value, which is called what? NRV. Okay, the collectible value which you will collect, net of cost. Okay, we use this value also. For example for that, we record receivables on NRV. Because receivables, we record the collectible amounts. Uncollectible we are removing. It means realizable value we are recording. Plus we are recording inventory also NRV. You will see. So what's the point you have to remember? NRV we are using to prepare financial statements somewhere. Second is what? Sometimes lot of items in the financial statement we record on present values. For example, bonds, lease receivables, lease payables. We record on which values? On present values. It means present values we are also using. Third is what? Historical cost. Lot of items we record on historical cost, which are already paid in the past. Maybe you bought the land 10 years ago for 10,000. Still you are showing at 10,000. This is historical cost. Some items we recorded which value at? Market values. For example, what's the example? Like if you are buying the stocks or bonds of other company, so you can record it market value also. Every balance sheet date, what's the market value? Put the value of investment according to that. Then you also record what some items at replacement. These definitions we will study in future, don't you? I'm just highlighting the words. This is the replacement cost. Okay, like replacement cost we are also using like for what? For inventory under US GAAP. Okay, so now what is the point you have to memorize here? We never use, this is the point which you have to use. We never use which value? Liquidation value. While preparing the financial statements. What's the liquidation value? Liquidation value means if you will see when you are working as accountant, you never think this way, oh, if I will close this business, right? How much value I will get for car, furniture, etc. That is liquidation value. Liquidation means if you will wind up the business. And we don't assume this. We assume our business is going concern. That is why liquidation value we will never use. All other values can be used. In a question, if he will tell you, if he will ask you which value you will not use for balance or financial statement preparation, he will give you multiple options. You have to search for this option. This value we will never use. Other than that, whatever is given, we are using. Okay? Clear? Yes. Yes, guys, please confirm through the chat option. Is that clear?
Can you please give us an example for liquidation value?
Liquidation value.
Yeah, again.
A car. I know you are going to leave this country in one day. Your visa is cancelled. Right?
Okay.
Even your car value will be 20,000, but I will never give you 20,000. I will take this opportunity. I know you are in urgency. So I will pay you less. So the whatever value now you will get in this situation, that is liquidation value.
Okay, no.
If obviously business is closed, no one will pay you market values because you want to get rid from furniture every item. Right or wrong? When you are changing maybe one house from one to other, sometimes we feel maybe cost of moving the item is more than cost of buying the item. It's better to leave it here. And you are selling your furniture, maybe if you bought for 500, you are selling for 50. This is liquidation. Right?
Okay, thank you.
Now we have here another concept which is called accrual concept. Accrual concept applies on two things. It applies on revenues and what? Expenses. Revenue and expenses. Okay, what does mean by accrual? Accrual mean to say revenue we record in the period in which they were earned, even if the cash will be received in the future period. For example, what example comes in your mind? Credit sales. When you make the sales, you book the revenue. Even you didn't collect the cash. This is why you are doing due to accrual concept. Right or wrong? Then expense. Expenses are recognized in the period in which they were incurred, even if the cash will be paid in the future period. Right? Even the cash will be paid in the future period. For example, salary. Salary of the month of September, even you are going to pay in November, but the expense you will record in the month of September. Right? Why you are doing this? Due to accrual concepts. So what's the word? Revenue should be recorded when it is earned. Even you receive the cash or not. And expenses should be recorded when these are incurred, even you paid the cash for this one. Okay? I also it is clear. Then here we have another topic which is called what? Users of financial statements. Who are users of? Obviously, you can categorize external users who will use the financial statement of the companies, and you will have what? Internal users. External users who are going to use the statement of financial statements of the companies. It might be what? Investors. Obviously, you want to select which company is better to invest. How you will get to know? By reading the financial statement or by taking advice from the brokers if you don't have financial information. Right? Second is what? Creditors are lenders. Like banks. If they before the loan, obviously they will check your credit worthiness. Would you be able to return their money or not? Right or wrong? So that is what is called your criteria. So they how they can check your credit worthiness? By looking at the financial statements, like how much profits you have, already loans you have, etc. Then what? Financial advisors. Obviously, if you are working as a broker, you have to advise your clients. Like this company is better for investment, this is not better. How would you know? By obviously analyzing the financial statements. Then we have here stock exchanges. There are also the users. How? Because it's a requirement of stock exchange. If you are a listed company, you have to submit your audited financial statement with the stock exchange also, because they're keeping your records. Later on, you will not be able to change it, obviously. Right or wrong? So it means they are also using, even whatever the purpose is, but they're using. Then we have here what? With tax authorities. They want to know how much VAT return you have filed in the quarter and what is your actual revenue of the whole year and whole VAT, how much you paid in the whole year. Right or wrong? They can also use your financial data. Right or wrong? They can use your ledgers, etc. So it means they are also the users. Then we have here which users? Internal users. Like from inside the company. Internal users could be what? Management. Right? Sometimes management salaries or bonuses are performance relevant. Maybe if you are a board of directors, maybe company has given you option, if our profit will reach to this level, we will give you this much bonus. Right or wrong? And profit is reached to that or not, from where you will get income statement, financial statements. Same with employees, maybe they are also using. For example, if you are accountant, you know your company is in losses, you will never ask your employer to give you increment. Right or wrong? If your company is in profit, maybe you will ask to give you increment also. Right? So profit and loss information from where you are getting from financial statements. Clear? Got it? So this is what is just reading. You can read these stories are written here. Now I'm going to tell you what we have one more thing which is called financial statement relationships. What's the financial statements relationship? Guys here, we have a relationship need to say like one item, for example, inventory. You are recording in income statement also under cost of goods sold. Same closing inventory you are recording in balance sheet as the current assets. Same you might record in the cash flow statement as the changes in working capital. It means one item is recorded in different parts of the statement. This is called relationship. For example, profit and loss for the period. It's in the income statement. This value you will transfer to the retained earning also, which is a part of balance sheet. This value will go to statement of changes in equity as well. Right or wrong? Profit and loss value. Right. Same here you might have a salaries payable. It's recorded as expense. It's recorded as a liability as well, payable. Right. So you have a lot of items which are recorded in different parts of the financial statement. So here just they give you some examples. Like net income, I told you. You are recording in profit and loss, you are recording in retained earnings, you are recording changes in equity. Right. So then I gave you examples for example, ending inventory also. There are so many items. You don't need to remember all examples. Just idea we are talking about. What we are talking about financial statement relationships. Like the different items are recorded in different parts of the financial statement. This is what is your financial statement. You have plenty of items are there. Interest payable. If it is not yet paid, obviously, it will be recorded in income statement and balance sheet as a liability also. Provisions will be recorded as expense and will be recorded as a liability. So many items are there. Okay. Depreciation also recorded in income statement, plus it's recorded in balance sheet as a part of accumulated depreciation, right? Right or wrong? So these things, this is called what relationship. Now guys, we are going to talk about here statement of financial position, balance sheet. Okay guys, refresh yourself for 2 minutes because now we are going into definitions. For 2 minutes, relax yourself, then we will continue. Let me read that, please. Okay guys, welcome back. So now we are going to talk about statement of financial position. It's called balance sheet. So balance sheet, obviously, first of all, you should remember what it represents. It represents financial position of the business at specific date. Right or wrong? Like at this date, how much assets you have, or how much liabilities you have, or how much equity you have at specific date. It represents financial position. And mostly in balance sheet, we have three items. Which three items we have? We have here assets. One side is assets. Other side is called liability plus equity. This is the accounting equation. And this is true. Even in your normal life, if you have a car, for example, car you bought for $80. That's it. So it means asset value is $80. If you took a loan of 80, so then equity will be 0. Because equity means your own investment. This equation will prove. If you bought this car by taking 0 loan, 0, liability will be 0, and you invested from your pocket, equity will be 80. Or maybe you have taken $60 loan and $20 you put from your pocket. So all assets are always generated this way. Right? Your assets are created either through increase of liabilities or by your own investment. Own investment is called equity. First, we need to understand. Let me take you to this side, guys. What's the equation? Assets is equal to liability plus equity. Liability plus equity. Assets has two types: current assets and non-current assets. Same here, liabilities has two types: current liabilities, non-current liabilities. First, understand this. So let me start first. What is the definition of asset? And then we will move what are the current assets and what are the non-current assets. Then we will move to the liability side. So here we go. Asset definition, I'm going to start. What's the asset? It's written here, assets are resources. Resources means which will give you benefit. Right? For example, what resources you have? So those are your assets, like land, building, plant, machinery, vehicles. Right? Our resources means all the resources which we deploy into the business. This is second word is what? Controlled by entity. They didn't say owned by entity. Did they say owned by? Controlled by entity. For example, if you have taken car on lease means say from bank. For 5 years you have to pay installments. If I will ask you who's this car, what would be your reply? What's your answer? It's your bank car. Bank car. So you will say it's a bank car, huh? What you would say? No, it is yours. Is it yours or bank? Obviously, you are boss. Why you are reluctant?
It's for the company.
It's your car, right? You will not say if you took the car on lease. Okay.
Yes, it's my car.
Please switch off your mics, guys, please. If I will ask you, simply you took the car from Al-Futtaim, you bought it car, your car is financed by Emirates NBD. Even this car is with the name of Emirates NBD, but you are using, it's with you. So if I will ask you this car, you will say it's my car. It's on lease, but it's your. Why? It is even not owned by you. It's owned by Emirates NBD. Because it is controlled by you. Control is what? Whenever you want to drive, you can drive. Wherever you want, you can go. Right or wrong? Wherever you want to park, you can park. Right or wrong? Maybe you want to take it to anywhere you can go. Control mean to say you can direct the use of asset. You have a right to direct the use of asset. Plus benefits, you have a right to get the benefit. This is what it does mean by control. So assets are controlled by entity. It's not necessary it must be owned by entity. Leased assets are company's assets. Why they're recording as asset? Because it is controlled by them, even not owned by them. If you have a neighbor and he is owning car, can you say this is my car? In this situation, your neighbor car. Can you record in your balance sheet I have this car? No. Why? Because you don't have a control. You can't take any time, anywhere without asking him. No. He is the one who is controlling. Clear? And these resources which are controlled by entity, how it arises? It arises due to past event, like some transaction has happened in the past. Due to that, you are controlling this asset today. In the asset definition, there is no owned word. What is control? Okay. Now, let me tell you what are current and non-current. This is US GAAP, I'm telling you. Let me write it here. First of all, select whichever is shorter. What? A period of 1 year. Okay. Period of 1 year means I'm putting one more word, from reporting date. Second is what? B, operating cycle. These two words you need to understand. For operating cycle, I'm putting one word here, cash paid and cash received. Cash paid and then arrow and cash received. Let's understand what it is. And then we will move to current and non-current. First, understand these two words. For example, your balance sheet date is, your balance sheet, this is what you are preparing, balance sheet 31st December 2022. This is called your reporting date. Which date? Reporting date. At this date you are setting now, because you are preparing balance sheet. From here you have to take what? Period of 1 year. And from this date, 1 year, when it will be completed? Tell me. 31st December 2023. This is your period of 1 year. Like from this date, you have to count 1 year period. Take that period. Okay. And then you have to take second thing. What you have to take? Operating cycle. What's operating cycle? It's a time span, time difference between 2 points. Which 2 points? When you paid the cash and when you received the cash. This is what is called operating cycle. I'm not going to calculate operating cycle. I'm just going to guide you. Calculation, it's a part of management accounting. We'll study in part 2 how it is calculated. But it's a difference between when you paid the cash and when you received the cash. That is called operating cycle. I'm giving you 2 examples here. First example, I'm quoting here for cafeteria. Maybe morning 5 a.m. you will wake up. You will go to the market. You will buy tea bags, right? Milk, etc., sugar, water. You paid the cash at morning 6 p.m. right? Maybe at daytime you will make teas and you will sell it. You collect the cash by the evening also. In the operating cycle is how many days? Only 1 day. Here you paid, here you got. Now if you are, another example. If you are constructing building, for example, or if you are constructing ships or planes, maybe today you will buy material, you paid the cash.
Yeah.
Okay, you paid the cash. Maybe 3 years it will take to construct the ship. After 3 years, ship is waiting for a customer. Maybe next 5 years you took to get the customer. Let's assume. Another customer is saying, no, I will not pay 100% total. I will pay you in installment and my installment will end over 6 years. It means maybe you are going to take 14 years. Today you paid cash to acquire the material, and to collect the cash from the customer you took 14 years. So now operating cycle is how many years? 14 years. Right or wrong? So gap says what? You have to select whichever is not shorter. Whichever is longer. By mistake I have made. Whichever is longer. Longer of what? Period of 1 year or what? Operating cycle. Okay. For example, cafeteria. And you are running cafeteria. I bought a tea on credit. When I will pay you? After 6 months? What I would say, you tell me practically. Maybe I will say, I forget my purse at home. Next time, whenever I will come, I will give you. And I'm drinking maybe 3-4 teas a day. Right or wrong? I'm just giving you funny example there. So guys, the point is you have to select the longer period. Longer period of what? Period of 1 year. Even there is a credit, so it's depends on the nature of the business. Sometimes you have this kind of business, your credit period is very short. You have to take period of 1 year or what the operating cycle. Shorter one. Sorry, the longer one you have to select. Now guys, look. If you are running a cafeteria, and how you would decide this asset is current or non-current. So what is the shorter? Shorter is 1 year period or 1 day. 1 day. Now we have selected the 1 day. It means any asset which will give you benefit within 1 day now, that will become your current. And any asset which will give you benefit beyond the what I am doing. Guys, you have to select the longer. Actually, my mind is to the math side, sorry. So longer. We have to select what? The longer. 1 day is longer, 1 year is longer. 1 year is longer. You have to select longer. If any asset which will give you benefit within the longer period. Benefits, I'm using what? Within longer period. Within longer period, that will become current. And any asset which will give you benefit beyond the longer period, that will become your under the current and beyond the non-current. Every time I'm not incorrect. Anything which will give you benefit within the longer period, that will become which asset? Current assets. And any benefit resource which will give you benefits beyond the longer period, after means over 1 year, more than 1 year, that will become your non-current. Okay. Longer you have to take. Not the shorter, longer. Okay. Then guys, you have to, if you are running a, for example, business, Boeing company, and you are manufacturing jet fighters or other planes or ships, let's assume. So now you have to select the period of, let's assume your operating cycle is 10 years. Now, which is longer, 1 year or 10 years? Obviously 10 years. This you will select now. Now, any asset which will give you benefit within 10 years, that will become your current assets. And any asset which will give you benefit beyond 10 years, that will become your non-current. And gap is very logical here. They are saying assets are current or non-current. You have to check the nature of the business. According to that, decide. And IFRS says what? Just like the period of 1 year. Within 1 year current, beyond 1 year, it is non-current. However, IFRS we are not studying here, we are talking about gap. What's the rule? First, you have to identify period of 1 year. Second, you have to identify from the question operating cycle. And then you have to select the longer one. And then you have to see which assets are realized within 1 year, current, within longer period, current, beyond longer period, non-current. Right? Same here, liabilities. What are liabilities? Liabilities definition I'm telling you now. Liabilities are what? Present obligation. Means you have to pay. Right or wrong? Which arises due to what? Past event. Maybe you bought some things on credit in past, you have to pay now. Maybe you took a loan in past, you have to pay now. Maybe you took services of employees, you have to pay now. It is your current liabilities. Present obligation due to which event? Future event, past event, and this will result in outflow or inflow. Settlement of liability, outflow of resources. Assets gives you result in inflow. Right or wrong? So three keywords are there. Present obligation due to past event, which would result in outflow of the economic benefit. Now again, is it current or non-current? Again, you have to select longer one. Longer of 1 year or operating cycle, whichever is longer. Any liability which will be settled within the longer period, that will become current, and any liability which will be settled over or beyond the longer period, that will become non-current. Clear? Got it?
Can I ask something, please?
Yeah, please, you can ask.
هلا in the exam they will mention for us, for example, operation cycle, it's 10 years or 6 months or anything else, or how we can know that
Exam, nothing
time.
will be tested from it. It's just a definition I'm teaching you. They don't test definitions.
Okay.
It's just a definition. No need to go further for your question. It's just a definition.
Okay, so it's not always that patient.
Just a definition, I'm explaining, madam. CMA have a lot of things. They don't have just asked you about asset definition, liability definition. Okay.
Okay.
In exam, otherwise they will tell you operating cycle also, period of longer year also. He will tell you maturity of assets and liability also. Then you have to just match.
Okay.
Then we have a third definition. Okay, now let me tell you examples of current assets. What are the examples of current assets? Which is current asset, huh? Normally, receivables, inventory, repayments, right or wrong, cash, right? These are your current assets. What are non-current assets? Land, building, furniture, fixtures, equipment, plant and machinery, tools, right? Normally. Okay. Now I'm asking you a question. What about liabilities? Okay, under current asset, non-current asset, So non-current asset we have, and then we have in non-current asset we have further two categories: tangible assets and what? Intangible assets. What are tangible? Which is physical existence, like land, building, plant, machinery. Intangible, which don't have physical existence, like goodwill, patent, copyrights, customer list, softwares, etc. Right or wrong? Just I'm explaining nothing else. Then guys, now I want to tell you about what? Liabilities already. Liabilities, current liabilities what? Trade payables, interest payable, dividend payable, which you have to pay in short period, simply. Right or wrong? And non-current liabilities, you might have a lease payables over the longer period, loans payables, bonds payables. Right or wrong? Maybe deferred tax payables, deferred tax. Okay, different kind of liabilities are there. So it's not my point to tell you because I can't code all examples by teaching these. All are big topics. Then we have a third definition, which I'm going to tell you what about equity. Okay, third definition of equity.
Excellent.
Guys, this is how equity is defined. Do you remember accounting equation? What's the accounting equation? Asset is equal to liability plus. Okay, if I want equity, how I will get? Assets minus. Okay, so same thing, it's written under English. How defined equity is defined? How equity is defined? Equity is defined this way. It is the residual interest. What? Residual interest into where? Into assets of the business. Assets of business after subtraction of liability. After subtraction of Residual interest of home, residual interest of owners. For example, if you will wind up your business, what you will do? You will sell the assets. Right or wrong? You will take all money at home or you will pay liabilities first. You will pay liabilities first. If you want to do fraud, you can take all money. But if you want to operate honestly, you have to pay liability first. Right or wrong? Whatever is left after payment of liability, that you can take to the home. That is called equity. This is what is written here. Residual means the remaining money, which you will get through the assets, but after payment of liabilities. Clear? Equity is also called net asset. Please don't forget. It's other word for net assets. Asset managed liability is equity. Asset managed liability is also called net assets. Okay. Now in equity, which items we have? In equity, yeah, I'm going to explain a few words here. It's written there in the sheet. I'm just using a pen. Yes, these are items which are the part of equity, mostly.
Capital.
Items of equity. You could have first item you might have here. First item, let me put heading wise. You might have a common stock. What? And there are two accounts for common stock. Common stock with the par value and common stock with the additional paid in capital. APIC stands for additional paid in capital. This could be the part of equity. We will study this accounting for stock, don't you? Second item could be what there? Preferred stock. Which stock? Again, we have two accounts for preferred stocks. Preferred stocks with par value and preferred stocks with one additional paid in capital. Third item you might have what? Retained earnings. What? Fourth item you might have accumulated OCI. OCI stands for other comprehensive income. We will study these things. I am just giving you idea today. OCI. Then you might have item number fifth with the name of treasury stock. Treasury stocks. Yeah, I have written in other companies. Now, just I'm quickly explaining, guys. What's the difference between common stock, preferred stock? We will study in future classes. But I'm telling you one thing: common stock have voting rights. What they have? Voting rights, like they can participate in decision making. But preferred stocks holder, they don't have. Okay, what is par value, additional paid in capital? We will study all these things with the equity topic. Okay, what is retained earnings? It means two types of stocks you might have in your exam. Which two types of stocks you might have? Common and preferred. In equity, you might also have what? Retained earning. What's retained earning? Accumulated profits, which is not yet distributed. Still you hold. Right? That is got retained earnings, accumulated profits of the company. Then you have accumulated OCA, we will study these things. And then you have a treasury stock. Treasury stocks, what are treasury? It is also known as repurchased stock. Which stock? Repurchased stock. Treasury. So their definitions we will cover. Okay. But here I'm just giving you items in the equity. I told you just equity definition and items which are the part of equity. What's the equity? How you will define? It's a residual interest of owners into assets business after subtraction of liabilities. And what items are there? Common stock, preferred stocks, retained earning, accumulated OCA, and treasury stock. What's the alternative name of treasury stock? Repurchased stock. Mostly these items are there in the equity section. Okay. Now, guys, there is a one common question. Sometimes they test it in your exam. I want to tell you it. With the example, then I will explain. It's written up somewhere. Yeah. Yeah, this is sometimes question is there. Because this is what I feel it's important. You must be aware with this. Sometimes same question will be tested. It could be tested, important one. Okay, first I would request you to read this point, what is highlighted by yourself. Then I will give you example to understand. You read it? Okay, let's have a look with the help of example what it says. For example, company A, it's having a loan. Like company is preparing balance sheet at which date at 31st December 2022. Company A. They have a loan in balance sheet which is payable on what? On maybe 30th June 2023. It is payable. It means within 6 months it is payable. So it is your which liability? Current liabilities. I'm putting here. It is your current liabilities. And loan amount is how much? For example, 100,000. Now, at this date, balance sheet date, company has agreed with Emirates NBD Bank. And Emirates NBD Bank has agreed with the company that they will take up this loan. They will take up this loan. Like what Emirates NBD take up means Emirates NBD will pay full value to that person. Okay. And then Emirates NBD will take the money from the company in future. Right. And Emirates NBD has agreed that this money that customer can pay after 5 years, for example. Just assuming. After 5 years. Now tell me, it means this current liabilities, this is called current liabilities, financed based on non-current basis. Right or wrong? Current liabilities financed based on what? Non-current basis. Now, this is the question which I'm saying now. What I can do, if it is done, like company has intention to refinance, has what? Intention to refinance, and company has executed his intention. Even money is not yet transferred. So still what we can do, we can classify this current liabilities to what? To the non-current liabilities. I can remove from here and I can put here non-current liabilities as what? 100,000 if these two conditions are met. Which two conditions? Current liabilities. Right or wrong? Do not include short-term debt if an entity intends to refinance them on what? Non-current basis and demonstrate the ability to do so. Demonstrate ability means maybe you have agreed with the NBD already, you have signed the contract, etc. If you have demonstrated this ability, then the current liabilities you can classify from current to non-current sector. Got it? But these two conditions should be met. In theoretical question, you need to look for these two conditions. These two words are there, then you will say if only one word he told you, not the second statement. If he told you only one, can you classify current to non-current? No. Both conditions should be met. There should be intention to refinance on non-current basis, and you have demonstrated the ability to use it. Okay? Done? I hope that is clear. Okay. Guys, I'm asking you simple question. Just for the example purpose. You paid CMA fee to the British Columbia. Okay? For us, is it a revenue or liability for us? Time being. No, it is liability. Why? Because we have to provide you the services. Now, as per the new standards, until unless performance obligation is not satisfied, you cannot book the revenue. It means today, if you paid the fee, we should book the entry debit cash, credit what? Liability. Right? This liability, why I'm saying this actually? Because this is called unearned revenue. Unearned revenue, because not yet earned. We have to provide the services of part 1, part 2 classes, then we can book practically. British Columbia, maybe they are booking revenue, I'm not sure. But I'm telling you, this word I want to tell you, unearned revenue. Unearned revenue is also called deferred income. What it is called? Deferred income. Okay, like it is your income, but right now you cannot book, you have to defer. Okay, defer for the future period. Clear? It's your liability also. Huh? Maybe in question will ask you unearned revenues, your assets are liability or expense, whatever you have to select liability. Unearned revenue is also called what? Deferred income. Okay. So we are going to talk about balance sheet limitations. What we are going to talk about? Balance sheet limitations. What are the limitations? What do you think, guys? What's the problem with the balance sheet? What could be the problem? Because balance sheet we prepare at specific date. For example, if you are preparing at 31st December 2022, it means what you are saying. You are saying I have assets at per this date, this much cash, this much liability, this much equity, right? And very next day, if I will make payments, that position might change. So this is the first limitation. You got it? When you are showing assets, liabilities, equity at a particular date, you can't trust on the balance sheet only. Maybe very next year will change. If I'm reading the balance sheet after 1 month of the last year balance sheet, I should not trust only on last year values now. Maybe within this 1 month, a lot of things have changed. You got the limitation, right? Second is what? Lot of values you are recording on estimates. Based on what? Estimates. For example, provisions is totally your estimates. Allowances for receivables, total your estimates. Right? Even depreciation, I would say your estimate. Right? Lot of items we are recorded in the balance sheet based on what? Estimate is also limitation. Based on assumption, because estimate is based on your assumption. Your assumption will change, obviously, amount should also change. This is also second limitation. And please remember here one more word which I want to tell you. Because today just we are discussing dictionary. We are talking about here, guys, this word that is called permanent accounts, or which accounts? Real accounts. Okay. Account is a ledger I'm talking about. Ledgers, you know, right? Maybe better than me because I'm not into practice now. Right? Ledgers are what? T accounts, where you record debit, credit side, posting. Right? On debit side and on credit side. Okay. Now, for assets, you always have opening balance in the ledger. And at the end of the year, you will have closing balance or not, obviously. For liabilities, you will have opening balance, you will have a closing balance. For equity also, opening balance, closing balance, and changes you are recording. Right? Have you ever had opening balance of revenue and closing balance of revenue? Opening balance of maybe discount and closing balance of discount? No. For income statement, we don't have, because income statement ledgers we close every year. Next year we open the new ledgers. But balance sheet ledgers, we can continue with the same ledger for many years until assets we have. Right? Got my point? So it means the ledgers relevant to balance sheet are called what? Permanent ledgers, because it will last for many years. And permanent ledger is also called what? Real ledgers. And every year we will close it. Next year we will open it with opening balance. I must suggest we are shifting carried on balance and brought on balance, or closing balance and opening balance. Right? I'm not asking you to prepare ledgers. No, you are not required. Just I'm telling you this words. Balance sheet ledgers, name of balance sheet ledgers are what? Name of balance sheet ledger is what? Permanent ledgers or what? Real accounts. Clear? So limitations I already told you. What's the limit? Can you read the first limitation? First point is clear. It's showing the value at specific date, which can change immediately after next year, maybe very next. What's the next year? Read next. Many balance sheet items, such as fixed assets, are recorded at historical cost, which might not be correct today. Maybe you bought a car like in UAE 10 years ago for 30,000. Today maybe its value will be only 1,000, but still you are showing 30 because you are using. Right or wrong? It's not showing correct picture also. Right? Third point is what? The preparation of the balance sheet requires estimates and management judgment, which is also a risky area. Obviously, wherever estimates are involved, so liability is reducing, right? Right? So now guys, let me show you some questions, because income statement we cannot finish. Income statement, with income statement, I have to teach statement of comprehensive income together. Okay, so let's do some questions in order to get the idea about it. I'm not sure. Even answer is there, but don't look at the answer. Focus on the question only. Yeah. Question number 1. Please read the question, guys. They are saying which of the following is true True regarding what? Regarding comparison of managerial and financial accounting, don't look at the answer. I will ask you why it is true or false. Which is true for comparison of managerial and financial accounting. Number one, managerial accounting is generally more precise. What do you think? No, managerial accounting is always more detailed. More details we need, different reports, not precise. B, managerial accounting has past focus. No, for future focus. We do the managerial reporting, etc. for future decision making. Financial accounting has past focus. We are preparing for last 12 months. Right? C, emphasis of financial of management accounting is what? Relevant. Like they are saying management accounting provides you relevant information. So financial accounting is not providing you relevant. No, it provides you relevant. I told you the purpose of general purpose financial statement is to provide useful information. Useful means what? Relevant, faithfully presented, and comparable. So they're saying the emphasis of managerial accounting is relevance, and emphasis of financial accounting is timeliness. No, relevance is also there, and timeliness should also be there. You will never produce financial statement after 2 years, 3 years, every year, right? D, managerial accounting needs not to follow generally accepted accounting principle. I would say GAAP. Yes, true. But management accounting, you don't need to follow GAAP. Correct? This is the answer. Question number 2. Read it first. Which value we don't use to prepare the financial statement? When your business is going concern, liquidation. Because liquidation value, we will close it. But in going concern, we assume we will not close it. It is liquidation value we don't use. Right? From the balance sheet, these kind of questions will be there in your exam. Read the question. Okay, what they are saying that when classifying assets as a current or non-current, okay, current and non-current for reporting purpose. So read the question, what the question they are saying. The amounts at which current assets are carried and reported must reflect realizable cash value. No, it's not correct. Where you can record historical cost, you can record on present value. A lot of items we use different values that we use. Prepayments for the items such as insurance or rent are included in other assets group rather than current. No, prepayments are your current assets. Right or wrong? The time period by which current assets are distinguishing from non-current assets is determined by seasonal nature. No, you have to take its current or non-current, you have to select the longer of 1 year or operating cycle. It's not about seasonal, no. Assets are classified as current if they are reasonably expected to be realized in cash or consumed during the normal operating cycle, because other options are not correct. It means they should be correct. Even he didn't discuss 1 year period. He said normal operating cycle. It's okay, because normal operating cycle is a part of that. Right? Okay. Read this question, please. Because question sometimes it requires your previous knowledge also. This thing, a statement of financial position provides a basis for all following except what? Computing rate of returns? I'm not sure because it requires a previous knowledge now. Rate of return, when you calculate how much returns you are calculating, how much returns you got, like investments, etc. Right? So these are the part of the balance sheet, right or wrong? Evaluating capital structure means a debt equity ratio, it's always in the balance sheet. Capital structure means a debt and equity information. It is always in the balance sheet. Assess liquidity. Liquidity, current ratio, quick ratio, you need current assets, current liabilities, from where you will get balance sheet. See, it's previous knowledge. Then determining profitability. No, profitability is calculated under income statement, not under balance sheet. Clear?
So the answer is D.
Yes, answer is D, because he's asking which is not the part of balance sheet, or which point which you will not get in the balance sheet, except. You have to answer it except. Okay.
Okay, and for the previous question, the answer is D also.
Yeah,
Assets are classified.
D.
Okay. Thank you.
Read this question. Now you are investors. Assume you are investors and creditors. You want to invest or you want to give loan. They are saying that a statement of transaction is intended to help investors and creditors in which way? Assess the amounts, timing, and uncertainty of prospects. Net cash inflows, no, it's not cash inflows. It is accrual accounting, not cash basis accounting. Financial accounting is accrual based, not cash based. So that's your first option is not correct. Second is what? The statement of transaction is intended to help investors and creditors to evaluate economic resource. Economic resource means assets. And what? Obligation. Yes, true. Balance sheet provides information about assets and obligations. Right or wrong? Next is what? Evaluate economic performance. No, performance is evaluated under income statement. Income statement shows financial performance, not the balance sheet. Evaluate changes and change in the ownership, equity of the firm. No, it will be provided the statement of changes in equity. There we will study. Right? Sometimes the statement which you didn't understand, remove it, because I didn't teach you anything about that. Right or wrong? So it means ownership and of equity, it is the part of statement changes in equity. So what balance sheet reflects? It reflects about what? Economic resource and obligation. Resource means assets, obligation means liabilities. Right or wrong? Okay, here maybe you have to apply the rule. Read the question. Read it. So what they're saying a corporation uses a calendar year for financial and tax reporting purpose and has 100 millions of mortgage bonds due on January 15 year 2. This you have to pay January 15 year 2. But January 10 year 2, the corporation intends to refinance. Like 5 days ago, you're going to intend to refinance the debt with the new long-term mortgage bonds and has entered into financing. Agreement is also signed. Then they're saying that clearly demonstrates the ability to demonstrate the refinancing. This debt is to be what? Reclassified what?
Long
Classified
term.
from current to non-current. So when it is written, they're saying classify as a current liability? No, not as. It should be classified from current to non-current. Then classify as long-term liabilities? Yes. Right or wrong?
But as at 31st December,
Huh?
the document, they didn't demonstrate it. Still they have to classify it? Because they
They are
demonstrated
saying
on
classify as
31st
long-term
January.
liability on the statement of financial position as at 31st December year 1. If you have demonstrated, because mostly what it is, you see, you are not taking the point. It's not like that we prepared the balance sheet and we don't make changes. No, up to the audit is not finished, we are changes. There are certain events.
Correct.
So we can correct, yeah, we can modify. Sometimes your practical knowledge will also give you edge. It doesn't mean you prepare the financial statement at year and 31st December, that's it. And it's final. No, it can be changed until audit is there, right? Audit report will be signed, financial statement will be approved. Up to that point, if there are some events, you can adjust. Clear? So this you can refinance. I hope so you got me what I'm saying. You can refinance. Okay. Clear? So these are kind of questions will be there, guys. Please you have to complete the question for topic number. Let me show you which topic. 1.1 and 2, right? 1 point. Yeah, 1 and 2 you have to study. 1 and 2. Okay, guys. See you next time. Let me also watch the match, not movie. We have a final today. Okay, guys. See you next time. Thank you so much. Maybe match can be interesting. 57 3 out. 3 out. 8th over. Okay, guys, bye bye.